Hi, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivatives data of Nifty, Bank Nifty, as well as on the different asset classes. Now, first of all, let us discuss what we have mentioned in our last video. Then we will try to figure out what are the patterns developing on the charts, and then we'll try to analyze what could be the trend for the next week. Now, first of all, we have discussed in the last video that the charts are getting sharper and sharper week by week. The rally is strengthening day by day. VIX was getting weaker, so the bulls might uh, they tighten their grip on the markets, and that's what has happened. And we have recommended buy on dips strategy for the last week. Last week we have a target of 43,005 on Bank Nifty, and in Nifty we had almost a target of 18,000 mark. So both were achieved. Market did behave on our expected lines. So now let us discuss what could be the trend for the next week. First of all, let me just mention that next week is a truncated week due to Maharashtra Day on the 1st May. Next, on second and third, there is FOMC meeting. That means Federal Reserve will be having a meeting, and they might discuss on the rate hike or a pause or a rate cut. But frankly speaking, I have a view that Fed might take a pause. There could not be a rate hike, but they would at least stop this particular rate hiking scenario. So that will propel the market on the upside. But that news has already been discussed, what I feel, because in the last two trading sessions or three trading sessions we have seen uh, Dow Jones has also rallied, the global market has also rallied, and Indian markets has already rallied in the last three trading sessions in a sharper manner. So that I think that news has been already discovered or discounted in the market. So due to truncated week in the next week, we might see some sort of consolidation or some sort of profit booking at the higher levels. Because most important thing which I would like to discuss is that in the last fag end on Friday, we have seen a sharp rally that was a short covering rally. We feel that the put writers might get trapped at those levels, and we might see selling pressure or profit booking on Tuesday or from Tuesday, maybe for couple of days, but the overall trend of the market is still bullish. So now let us first of all check out India VIX chart, and we'll try to we'll try to look out for what could be the trend at least for the next week. You can see since last couple of months, or to be precise, since February 2022, and currently we are into April series, entered into of May series. India VIX has been continuously on a downward falling uh, trend line. You can see it has maintained this particular trend line. Let me stretch this particular VIX so that we will have a clear view. Yes, now this is the charts of India VIX since February 2022. It has maintained this downward falling trend line, but on the contrary, you can see this particular horizontal blue line. It is just near the support, multiple support, or we can see this is a weekly chart. Let me put a monthly chart so that we will have a clear view of the VIX. Now see, this is the monthly chart of the VIX. It has already entered that particular multiple support of multiple years. You can see that that support has been maintained since 2014, maybe August 14. So that particular level is coming. So at this juncture, looking at this particular weeks, I feel that traders, those who are long in the markets, should try to book profits at the higher levels, wait for some reasonable corrections, and then try to build long position at the lower levels. This is purely on the basis of VIX. So now let us go to the Nifty daily charts, and we'll try to figure out the larger degree trend as well as the trend for next 10 to 12 trading sessions. This is the Nifty daily charts. So first of all, we will discuss what is the larger degree charts. Since March 2022, when markets was trading around 16,900, we have been advocating about a trend reversal, about bottoming out of the global markets, which includes the Indian markets, and that has happened very beautifully. You can see markets had rallied slowly and gradually, though this rally was very sharp. After that, Nifty went into a consolidation for 5 6 trading sessions, and then again it has rallied. Now you can see on the daily charts, Nifty has given a breakout of an inverse head and shoulder. You can clearly see this is the left shoulder. You can see this is the left shoulder, then it is a head, then this is a right shoulder with a breakout, decisive breakout. So larger degree trend seems to be very positive, and we have been saying that maybe in August or September, chances are that Nifty might give a breakout of its lifetime high, and it is inching towards those levels. So we are bullish since 16,900. Now it is a clear reversal pattern, which is inverse head and shoulder. But at this if Nifty might drift down or might see some sort of correction towards the levels of maybe 17,900 or 17,850 marks. This might give a breakout or some sort of cool off on the downside. Let me go to the 15 minutes charts so that we will have a clear view and what could happen in the next week. Might see some sort of profit booking at the higher levels. So now this is the 15-minute charts. You can see an inverted hammer. So this is the long-term trend line. I mean to say of last 15 trading sessions. So Nifty might come and test the levels of almost this what we call as 17,900 mark, or 17,900 to 17,025. If it breaks 17,900, then strong support could be seen around 17,850 mark. So now let us discuss the important support. So now, before discussing the important support, let me tell you that looking at the VIX, looking at this particular last 3 to 4 days of sharp rally, we might see profit booking at the higher levels. Put writers might get trapped at the higher levels, and next week is a truncated week, as well as on 2nd and 3rd of May we are having FOMC meeting in the US. They might pause the rate hikes, which has been already been discounted, because we have seen a sharp rally in Indian markets. And let me show you the Dow Jones markets also. Dow market has US market has also rallied very sharply in the last 2 trading sessions. So as I said, that news has been already discounted. So now let us come to the Nifty daily charts, and let us discuss the important supports and resistance for the next week. The important support in the next week for the Nifty is around 17,950 is the first support. Below that, second support is at 17,849, which is the crucial support. And this level, the traders, those who want to go long, can try to build long position. As of now, one should try to book profits at the higher levels. And the third support in the Nifty is around 17,777. Whereas on the upside, the first resistance is placed at 18,135. So maybe on Monday, if markets gaps up, or Nifty is witnessing a gap up opening, one should try to book profits at the higher levels. Try to avoid going long at those levels. Second resistance is around 18,265, and above that, the third resistance is around 18,318. These are the crucial supports and resistance level in Nifty for the next week. We might see some sort of profit booking at the higher levels, so one should wait for a correction and then try to build long position around 17,849 levels. So friend, now let us go to the option analysis of Nifty. First of all, we will discuss Nifty call option data. You will see on the screen, in Nifty call option, the action was seen in 18,100 calls, then 18,200 calls, 18,300 calls, and 18,400 calls. Now here you can see there has been a rise in the volume. Implied volatility is to the lowest, as we have discussed on the charts. It is to the lowest. You can see it is between 5.93 to 7.32, and that is because we have seen there is low volatility in the markets. Hardly Nifty is moving 100 points on an intraday basis. There has been a rise in the open interest. There has been a rise in the volumes. Implied volatility is still low, and option change percentage. The point wise change is slightly positive, as we have seen that Nifty is inching higher. So maybe looking at to the volumes, we feel that 18,100 to 18,150 might act as a major resistance on the upside, and one should try to book profits at the higher levels. Now let us discuss what we have observed on Nifty puts. You will see on the screen in Nifty puts, you can see the action was seen in 18,000 puts, then 17,900 puts, 17,800 puts, and 17,700 puts. Now here you can see volumes are rising, open interest is rising, implied volatility is slightly higher compared to you can see implied is between 8.71 and 11.35. Looking at the India VIX, 11.35 IV can be compared higher in this scenario. So if there is a gap up opening, this might go into a danger zone. So that might bring in profit booking at the higher levels. Now clearly you can see there has been the smart money has already done the put writing, which might see that the put writers might get trapped at the higher levels because of the truncated wick. So one need to be cautious at the higher levels. 18,100 to 18,150 might act as a major resistance. So from those levels, those who want to take a short call might take a short call. Put buyers can start buying puts around 18,100 to 18,150. We might see some sort of profit booking coming in at higher levels. So Nifty might take a pause around 17,900 to 18,400 and 17,850. Put might act as a major support area at the lower levels. So for at least for the next week, the view would be sell on rallies, try to book profits at the higher levels. One should wait for some decent correction, and one should try to build long positions near or between 17,850 to 17,900 mark. Now we will discuss the Bank Nifty daily charts. On Bank Nifty, also similar kind of pattern was seen. It has rallied sharply in a very short span of time. We have seen a triangular breakout. Bank Nifty has also rallied very sharply from 42,000 to 43,302, which is the swing high of Friday. In last 5 to 6 trading sessions, Bank Nifty has rallied sharply. RSI has also just entered into overbought territory. And as I said, looking at to the India VIX, it is nearing 2014's low. So we might see some sort of profit booking at the higher levels. One needs to be cautious, but overall the trend is positive. If we take a conservative target of Bank Nifty for long term from these levels, the target is coming around. The breakout was around 42,000. The low was around 38,600, almost 3,500 points. So 3,500 points from 42,000, which is coming at 45,500. So maybe in next 2 to 3 months, Bank Nifty might test the level of 45,500, and that will go beyond those levels also. But as of now, for next 2 months, the target is 45,500 on the upside. Any dips should be used as a buying opportunity. And for next week is a truncated week. We are having auto numbers also FOMC meeting. So we might see profit booking at the higher levels. And as I said, pause in a rate is already discounted because the global markets have rallied. Indian markets has already rallied in the last 3 trading sessions. That is already discounted. So we might see some sort of profit booking at the higher levels. So now, friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The important support in the Bank Nifty is placed at 43,043, which is the first support. Below that, second support is at 42,736, and below that, the third support is at 42,432. Whereas on the upside, the first resistance is placed at 43,578. Above that, the second resistance is around 43,767, and third resistance is around 44,144. Is the third resistance. So as I said, now let us discuss the Bank Nifty option data. In Bank Nifty call option, the action was seen in 43,300 calls, then 43,500 calls, and directly looking at to the volumes, the final action was seen in 44,000 calls. Now here you can see volumes are also rising, open interest is rising, implied volatility is low, it is between 7.93 to 8.96. The premium, the rise in the premium is not that much high compared to the put writing, which we will see in Bank Nifty when we'll discuss Bank Nifty puts. On the upside, as I said, in Bank Nifty calls on the upside, 43,300 to 43,500 could act as a major resistance. So now this is the area where we might see selling pressure coming in, because the volume concentration is between 43,300 and 43,400, and 43,500 could act as a major resistance. So if we see 150 points gap up on Monday, one should try to book profits. Those who are long in Bank Nifty, one needs to be cautious. In short, I would like to say that only. So now let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 42,800 puts, and 42,500 puts, and 42,000 puts. Now here you can see the smart money has already writing puts strongly, and as I said, those writers might get trapped next week. Now the most important thing which I would like to emphasize over here is the implied volatility. In low VIX, the implied volatility is between 11.69 to 14.76. I would consider this has already entered in danger zone. A gap up opening will take this implied volatility of Bank Nifty put into highly danger zone. That will bring in profit booking at the higher levels and selling pressure at the higher levels. So I would not recommend any traders to go long in Nifty as well as Bank Nifty on Tuesday. If there is a gap up opening, one should try to book profits. Wait for some correction, maybe 1% correction or 1.25% correction on both the indices. After that correction is seen, one should try to build long position at the lower levels. And as I said, the larger degree trend is positive. Our Indian markets, both the indices, will cross all-time high maybe in August or September. I do not have a particular date because the global geopolitics, global macros are affecting the markets. So that journey from here till lifetime high will be highly painful. It could be slow in nature. It will take patience of us as traders and investors. So any tips should be used as a buying opportunity. So in short, looking at the India VIX, looking at taking consideration the global events, truncated week, we might see some sort of profit booking at the higher levels. So next week could be at least maybe on Monday or Tuesday till Thursday, markets might remain sideways to negative, and from after expiry we might see the next leg of rally. So one needs to be cautious. Those who are long, try to book profits at the higher levels. One should wait for some correction and try to enter long at the lower levels. So the strategy would be sell on rise, book profits, as well as go long at the lower levels. So now friends, let us come to the final segment of our show, which is uh, positional call. I've identified one stock from IT sector. The name of the stock is Infosys. Let me go to the chart of Infi so that we can analyze it, and we will see why I have chosen Infosys to for investment purpose, or short term investment or long term investment. So now this is the monthly chart of Infosys. You can see the stock has corrected sharply from the levels of 1948, and it has taken a pause around 1185. Now it has the stock has mostly corrected sharply. This was ABC correction from A to B and from B to C. Almost it is equal wave 1, 2, and 3. Now looking at this particular pattern, let us go to the daily charts so that we will have a clear view. The stock is already into deep oversold territory, and yes, I'm saying that the results were not good in Infosys. So already that has been discounted, and now we will try to play a counter rally from these levels. Now, after the results were declared, the stock has corrected sharply. You can see uh, that this was a doji formation, long-legged doji. After that, the stock didn't see any kind of follow-up buying, as well as it didn't see any kind of severe follow-up selling. The stock is consolidating. You can see RSI is also given a positive crossover from the oversold territory. Stock is consolidating at these levels. I'm not saying that uh, this is a trend reversal, but looking at this particular long-term charts, stock has corrected, as I said, from maybe almost 1950 till 1185. The stock is looking good, and we might see a counter rally from these levels. The counter rally might be till 1390 to 1400 mark. So investors, those who want to invest for maybe next 3 to 4 months, 5 months, can start accumulating Infosys in the range of 1252, which is the closing price, and on corrections to 1230 for an upside target of 1390 for short to medium term. Short to medium term could be considered between 4 months, 5 months, and 6 months, because but this rally could be in slow and gradual manner. And even I would like to say that the CNX IT charts has also corrected sharply. It is also, I would consider it as into oversold territory, and it is again started rallying from the lower levels. You can see RSI is making positive divergence. So investors, specifically investors, those who are willing to start investing into the IT stocks, can start chipping in slow and gradual manner. This is CNX IT charts. So we might see a rally, or we might see a trend reversal at these levels. Any dips should be used as a buying opportunity in IT stocks, specifically TCS, Infosys, HCL Tech, uh, and then L&T Mindtree, then L&T Infotech, LTTS. So these are the stocks which one should now consider to buy at the lower levels. Any dips should be used as an investment opportunity in IT stocks, because CNX IT is bottoming out at these levels. So one should not fail in buying or adding IT stocks for long-term investment from these levels. So friends, thank you very much for watching the show. I know the video has slightly extended, but it has to be discussed, so I have discussed. Sorry for that, and have a nice trading week. Thank you very much.